Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Shell D'Souza as well. Shell, a very good afternoon to you as well. But market's a bit subdued this Friday, as well as, banks. That's something that we are keeping a close eye on, the Nifty Bank as well as the PSU Bank.
Absolutely, Vinny. Close eye on the banking space as a whole, or rather the financial space as a whole. And if you look at the markets today, definitely is moving, actually seeing a subdued trading session, you could say, for the benchmarks. The Nifty Bank is the one that is underperforming the benchmark indices. And talking about banks, given the fact that they are the talk of the town, we will be talking a lot about banks in today's episode of Market Fatafat. But first, let me bring on board our team of researchers as well as our analysts for today. We have Swati Hotkar joining us on the technical front, while from the team of research we have Lisa as well as Ankita who are joining on the show. Very good afternoon to all three of you, including you, Winnie. But let's talk about IDBI Bank, and that definitely is in focus. And IDBI Bank is seeing the sharp downtick in today's trading session as the government is seeing a delay in the stake sale. So that is primarily the reason why IDBI Bank is under pressure in today's trading session. You had the DIPAM secretary actually allude to that particular fact, that there could be some sort of a delay in the stake sale. Remember, the government owns about 45.48% stake in IDBI Bank, and LIC owns about 49.24% stake, and together they will sell around 60.7% stake in IDBI Bank. And government previously expected the sale to close by the end of March 2024. But what exactly did DIPAM secretary say in his exclusive conversation with my colleague Ankur Mishra? Take a look.
There is always a target, but the point is that whatever target is fixed 14 months ago, in February, that undergoes a change as we say what are the market conditions, and also as we have the transactions fructifying.
Okay, if you talk about the specifics, a few of the transactions which were ongoing were, of course, IDBI Bank, which was on the agenda for past 1.5 years or so. What is the progress there, if you can specify?
The IDBI Bank transaction is on course, and since it's a banking transaction, it really involves the RBI as well. So I think, you have a fit and proper issue of RBI, and then we have a due diligence. So it's going on in that direction.
So last question I would ask about what are the other transactions you are looking? You mentioned about the IPO. What are the other transactions you feel that this year will be fructified? And also IDBI Bank, is it happening this year or it will be in next financial year?
No, I mean the transactions, if you are meaning only the strategic disinvestment transactions, because transactions keep happening.
Right.
Now there is a transaction, for example, on IREDA IPO,
right,
which is going to take us this month.
No, that is happening. Sir, I asked about IDBI Bank. Is it happening this year? Is it a possibility?
Well, we can't say that because it's really, conditioned on several factors, which, as I said, that, this was a fit and proper examination by the RBI, which is presently the case. And then there is a due diligence and then financial bidding. So I think it depends upon, how much time all these things. It's a big thing, first time bank transaction happening.
And what happens to the other private banks, sir? We have been hearing for long. The private banks, there are two things. One, there are many public sector banks where you have to necessarily reduce your stake. And sir, other thing you were talking about privatization, out of 12 banks, there was an idea that in future there should be 4 or 5 public sector banks. So on both the things, what is the thinking of the government?
No, we are only talking of IDBI Bank at the moment, because that's one which is cleared by the cabinet.
Okay, that was the DIPAM secretary in talks with Ankur Mishra on IDBI Bank as well. But let's move on and talk about the whole banking sector, which has been in focus after the Reserve Bank of India has actually tightened some bit of the rules coming in for the consumer lending side. Now, this was mainly concerned about the surge in the consumer loans. They have increased the weights on retail loans, and banks and shadow lenders, that is obviously NBFCs, would need to set aside more capital for every loan to cover the likelihood of bad loans as well. So because of that, today we have seen that pressure is coming in on most of the banking names that you see. All of them are down and out in trade. Even SBI Cards, Paytm, whether you look at NBFC sector, all these are under pressure today. Let's look at some of what the brokerages are saying on this front as well. Now, Spark Capital actually is talking about that they see a capital raise necessity that could arise in the near term for SBI, and they see capital raise necessity in the medium term that could arise for Bank of Baroda, Canara Bank, Federal Bank, DCB Bank as well as RBL Bank as well. And in terms specifically for Federal Bank, RBL Bank and ICICI Bank, they could see some growth moderation coming in for these banks as well. Macquarie too said that these are these two main segments contributed to around 50% of the incremental credit in the last 12 months, and retail loan growth that has been strong at 18 to 20% in the past several months. So yes, unsecured loans also have seen a very strong growth, and because of that, all this regulations have actually come in. Fintechs like Paytm, which depend on lending partners, will also maybe see a bit of an impact coming in. That is why we're seeing Paytm is also seeing a bit of a fall coming in there. But the bigger issue is on the PSU banks, is what Macquarie is highlighting, which have a lower CET1 ratio. So that is mainly an impact that we could see coming in on this. Bernstein too says that this is actually a double whammy for NBFCs. They'll face higher capital requirements, and their cost of funds is also likely to see an increase as well. So because of this, we're seeing pressure coming in on the banking names, all as well as the financial space as a whole today, Cheryl.
Absolutely, and taking a leaf out of what exactly Vinny had to say, the fact that one man's loss, the other man's gain is what you know of, and that's exactly what is happening with the insurance companies as well as power lenders, because what analysts are now noting is the fact that investors would actually try to reduce or trim their exposure, a part of their corpus now, to the non-lending financial services companies, this in order to retain their overall exposure in the financial space. So that's why you are seeing some sort of surge coming in these power finance lenders, be it PTC India, be it for the matter of fact PFC, REC. Also, you're seeing some sort of a sharp up move coming in most of these insurance companies like SBI Life, which has gone to its record high levels. HDFC Life is seeing good uptake. You are also seeing good uptake in ICICI Prudential Life Insurance as well. Even the AMC companies are seeing good moves. So be it HDFC AMC, UTI AMC, even Nippon Life, all of them are seeing a sharp up move. And this, one of the reasons being, is the fact that now the investors will like to rejig their allocation when it comes to the financial space, and especially look at the non-lending financial companies, and those are insurance, AMCs, as well as the power lenders. So these are all the counters that are in focus on back of that particular development coming in on consumer loans.
Okay, and now switching gears and talking about the pharma sector, pharma space. Swati, you've picked out one stock for us, and that is Sun Pharma. On the charts, how is Sun Pharma now looking like? YTD, when you look at the performance, and specifically since May, we've seen that uptick, slow and steady moving upwards is what the Sun Pharma charts is indicating. But now what should we be expecting going forward?
Sun Pharma is really doing very well. You have rightly pointed out that since the May month, the stock has entered into the 4-digit and continuously making a rally towards the all-time high, which comes to nearby 1200 levels. I believe that the stock has a more potential to go up to at least 1300 levels on the higher side, and it will make a new all-time high, which comes to nearby 1300. The interesting point is that on a short-term parameters, the stock has given the flat pattern breakout, which is a very positive indication on the technical front, well placed above all the moving important averages. So whatever the technical parameters we analysts do look on the charts, all are fulfilling on a very positive way. So I believe those who are having any long positions, they should keep on hold for immediate target of 1300 rupees on the higher side, and those who are looking for keeping a stop loss, profit stop loss, 1150 will be the immediate support level that can be kept as a stop loss for immediate target of 1300 levels.
So that's the take coming in on Sun Pharma. And Lisa, let's talk about GSW Infra. This is a recently listed company but scaling new highs today.
Right, so GSW Infra, they have won a letter of award from the Karnataka government, and this is to build a greenfield multi-cargo port at Kenny of 30 metric tons. And it's worth around 4,120 crore. Now, during the pre-bid stage, there were 4 companies that had shown interest, including Adani Ports and the PIPT Adani Ports, as well as Navyuga Engineering, as well as other companies too. So yes, analysts are saying that the impact of this is that the funding of the project is not expected to stretch the balance sheet of the company, as it's a net cash company, and the ROCs, however, likely to be impacted negatively during the construction construction of this project. Capex per ton, that stands at around 137 crore, which is higher than its current capex per ton, but it's in line with the recent acquisitions in the sector. And Adani Port's acquisition of Gangavaram was at 100 crore per metric ton, and Krishna Patnam, that was at around 160 crore. So it's lower than these other transaction deals that were seen recently. So yes, that is why we can see GSW Infra as we speak now, it's up around 3%.
Okay, that is GSW Infra, but let's talk about Purvankara. Then Swati, this stock has been in focus in the last couple of trading sessions also, when you saw that, they have won some redevelopment projects also recently, 2 redevelopment projects. And when you look at it in the last 1 year, also seen almost an 85% return. Today also trading near those 52-week high levels. At current levels, do you still think one should hold on to this stock, or maybe start booking up profits, given that we've already seen such a sharp run up?
Yes, you were rightly pointed out that the news has came in last 2 days back that it has just gained the redevelopments projects. But if you look towards on a technical front, the stock has really given a breakout at the current levels only. If you look towards the charts from since 2018, the stock has formed the triple tops at around 130-140 levels. So at the current level, the stock has given the fresh breakout of multiple years breakout. So I believe that the new rally has just started, and I believe that the short-term target for this particular counter will be 200 and 240 levels on the higher side. So yes, fresh position can also be recommended at the current level, and those who are having already the long positions, they can hold on for immediate target of 200 to 240, whereas the downside, the support will lies at 145 levels.
All right, moving on. Ankita, let's talk about Jubilant Foodworks and why is this one in focus today?
Well, Jubilant Foodworks is in focus today on the back of a brokerage note by Morgan Stanley. Now, they're maintaining an equal weight with a target price of 493 rupees per share. Now, they feel that the cyclical sluggishness persists while the demand is sequentially getting better. Now, the store expansion plans of 200 to 225 stores is likely to continue. They're on track for that. And once the consumption revives, the company expects 15% revenue growth for Domino's, led by single-digit like-for-like growth and 10% for the store base. And on the back of that, we did see a sharp spike in Jubilant Foodworks in the morning, was up 1%, but now has cooled off and is down more than 0.5% from the day's highest point.
That is Jubilant Foodworks for y'all. But let's move on and talk about Alchem then on the charts. Swati, Alchem Labs, how is that looking like? What is the view on this one? YTD performance, almost 47% return. YTD, are you expecting more of an upside now?
Yes, on the technical front, I really expect a more rally from the current level. Why? Because the rationale behind on the technical front that the stock is just given the formation of the flat pattern, and it's on the verge of giving the breakout of the same level. From the last 2 trading sessions, we are witnessing that the stock is just forming the doji pattern, which is very good, very bullish pattern, candlestick pattern, and it's just trading on the higher side. I believe that this particular counter will take a new all-time high, which will come straight around 4600 to 4650 levels. So the fresh positions can be also recommended at the current market price, and those who are having any long positions, they can hold on with the trailing stop loss of 4350 levels, and I believe that the upside rally can be seen up to 46 to 4650 levels that they have there.
Okay, keeping an eye on those levels for Alchem Labs. But let's pull up the charts for these paint companies, whether an Asian Paints, Berger Paints. More of these stocks are buzzing in trade. There's a couple of news flows coming in for Asian Paints. But firstly, in terms of crude, that's at around $77 per barrel. That's the lowest levels that we have seen since almost July 2023. So because of that, 40% of the raw material cost for these paint companies actually come in from the crude and crude related derivatives as well. And that is why that main focus is coming in. The buzz is also because of that for the paint stocks. But other than that, we do have Asian Paints, where we have channel checks that are suggesting from Macquarie that Asian Paints has taken price cuts across its decorative portfolio of around rupees 2 per litre. Cuts are taken in across enamels, rupees 3 per litre cuts taken across economy emulsions as well as 10 per litre for reduction across waterproofing portfolio as well. So overall, the portfolio level would be around a 1% marginal cut. But yes, these price cuts are going to be effective from 15th of November. And obviously, it seems like lower raw material cost is something that will be passed on going forward as well. So because of these price cuts, and because of that, we're seeing all these paint stocks also buzzing in trade, crude as well as Asian Paint, specifically on price cuts as well.
All right, so that is the paint companies that are in focus. But yes, as the season of IPOs looks like it, and we have another one that is slated to open soon. We have Mr. Anil Koturi, who is the MD and CEO of Fed Bank Financial Services, joining us on the show right now. A very good afternoon to you, sir. Thank you so much for joining us on ET9. For the interest of our viewers, along with the Tier 1 requirements, how are you actually planning to utilize the funds that you are aiming to raise via the IPO?
So, FedFina is in business to empower emerging India with easy access to loans, which means we cater to the needs of the small self-employed customer and offer him working capital solutions to grow his business in a sustainable way. We've been growing quite rapidly over the years, and what we are now doing is to seek to augment our capital position. Okay, what this will do is to take up our capital by roughly 25%, and we will use this to further lever and disburse more loans in future. So that really is the objective behind the proposed primary fundraise of 600 crore rupees.
Right. This is Winnie joining in the conversation as well, Anil. And, what you also want to understand, if I look at it in terms of the branch expansion, I believe that the growth for you is the highest amongst your peers. So now, are you planning to keep this pace of growth? Is there any particular geography that you are going to be targeting now as well?
So over the past 5 years, we have sought to expand our branch network and have a significant presence across the country. We are present in 575 branches across 16 states and union territories in India. Now, every year we will continue to open branches, and the numbers of which and the specific locations we will firm up at the time we make our operating plan. But suffice to say that our branch expansion will support our aspirations and our ambitions to grow and serve the self-employed community in India.
Right. If you see the AUM growth, it was around 33% over the last 3 years and one of the highest growing amongst its peers. If you could tell us what is the expected AUM growth that you're envisaging going ahead?
We cater to the small self-employed customer in the country. Okay, less than a fifth of the needs of this segment are catered to, and the remaining actually goes a begging. So there is a huge opportunity to grow and serve this segment. Also, at this point in time, we have 575 branches, we employ 4,000 people, and we have all the ingredients to grow. So neither the market nor our resources constrain our growth in the future. If you look at the past, we've grown from an AUM of about 4,800 crore rupees in 21 to 6,222 to 9,100 crores in FY23. So we will continue to seize the opportunities afforded by the environment and seek to maintain our rate of growth.
Right, also your gold loans, they are around 33% of the total AUM. So are you planning to strengthen your position in the gold loans? Are you expecting any change in the AUM mix?
Our focus is on fulfilling the working capital needs of the self-employed segment in India, the small self-employed customer in India. We seek to do that through mortgage loans, gold loans, and unsecured loans. Okay. Now, we are seeking to grow all these businesses, and depending on the needs of the customer, these businesses will grow. The gold loan business has the additional variable of the price of gold. So obviously, as the prices of gold increase, then there is greater leverage available for the same collateral. So there is no intent or design to grow any specific segment, but suffice to say that we are a self-employed self-employed customers lender. We are a secured lender, and the proportion of secured lending will keep increasing year after year.
All right, let me put the spotlight on the announcement that had come in from RBI just yesterday post market hours, where they put some limits on the bank lending for NBFCs and even raised the risk weight for a few of the loan categories. How do you view this development coming in? Also, what could be the impact or implications of this on your company, if any?
what the Reserve Bank has done is to put guardrails and regulate segments which have been growing quite rapidly. Okay, and there will be short-term pangs of adjustments for various parts of the lending industry. But I think what these guidelines ensure is that the growth will be sustainable in the long run and there will be no shocks to the system. Specifically, we are rated AA. Our cost of borrowings and our access to borrowings is a significant source of strength and advantage for FedFina. Okay? While the recent regulations may have some impact on our cost of borrowings, most of our lending is for what is called priority sector lending by banks, and we expect that the impact, while it exists, should be minimal.
Also, just in terms of what's the return on asset or ROA for the company and the target there that you have, and the cost of borrowings, when you look at it, is relatively low for the company. So can you expect that the return on assets to clock about that 2% going forward as well?
Our ROA for the previous year was about 2.3%. Okay. Now, as we raise capital, that will have an impact in terms of increasing our ROA, because there is a greater proportion that will get funded by capital as opposed to debt. So yes, our ROA, as we raise capital, lower our leverage and get into operating efficiency, should increase from here on. That is the intent.
All right then, Mr. Koturi, we leave it there. Thank you so much for joining us on ET Now to talk about Fed Bank and your upcoming IPO. All the best for that. And that was the management of Fed Bank Financial Services. The IPO is slated to open on November 22nd and the price band is at 133 to 140 rupees per share. But let's move on with the stocks that are moving in trade. And Swati, ICICI Prudential, that one is seeing a smart up move. Short while ago did talk about the fact that how investors are now going to look at these non-lending financial companies, but ICICI Prudential on the chart, how's it looking?
Yes, from the last 2 days, the stock has managed to give the breakout of 200-day and the important moving averages, because from last 2 months, we have seen that the stock was really underperforming. We have seen a correction from almost 600 levels to 500. Now it has just shown some positive sign of a reversal, and I believe that this pullback rally is likely to be continued towards to 600 to 640 levels on the higher side. So those who are having any long positions, they can hold on. On a downside, 550 will act as a cluster support zone, so that can be kept as a profit stop losses, and the long positions can be hold on for immediate target of 600 to 640 levels on the higher side.
All right, moving on then, let's talk about IRB Infra and put the spotlight on that particular company. It's hit a fresh record high level in today's trading session. At one point in time, it traded higher by as much as 7.8%, taking the stock to a record high of about 38.5 rupees per share. Now it's trading marginally lower compared to the previous levels. Over about, you had about 1.13 crore shares actually change hands in 13 separate block deals this afternoon, and the price range for that block deal was 35.95 rupees per share to about 38.05 rupees per share. Apart from that, you have Moody's that has actually affirmed the long-term corporate family rating on IRB Infra. They're seeing gradual rise in the cash flows of the companies, and the stock, if you look at it today, is up for a third consecutive session, hit a record high.
Okay, surely keeping an eye out on IRB Infra. But on that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more stocks after the break.